should I pay off my mortgage before retiring?
Welcome to Barry's Bites. Please join our host, attorney and financial advisor Chris Barry.
This is a question I get all the time is, should I pay off the mortgage? Kind of without knowing the details, everyone's situation is a little bit different, but there's a general rule of thumb. So you look at the interest rate. If the interest rate is less than roughly 4%, then typically you would want to keep that mortgage. If the interest rate is greater than 4%, you might want to pay off the mortgage. And there's a numbers and psychology aspect to this. And the numbers might say one thing, the psychology might say something else, and you just have to figure out where you fall. And interesting enough, like my undergrad before I went to law school was actually in psychology and finance. So I understand both sides of the coin, because from a psychology standpoint, like we brought up on the American dream and being debt free, paying off the mortgage sounds great. But sometimes the numbers would say otherwise. Because think of it like a bucket. If you have water in this bucket and there's a hole in the bucket, and I met with some clients today, they had a mortgage of $80,000 and the interest rate was 2.75%. So they had this mortgage from a while ago. So there's a hole in the bucket where 2.75 is dripping out a year, right? But if you look at what you can do in terms of investments, if it's greater than that 2.75 or kind of the general rule 4%, then it wouldn't make sense to fill the hole because you're getting more money pouring in. Because if you use that cash to plug the hole, granted, you plugged a 2.75% hole going out, but you're sacrificing money that could be making 4.5%. Like we have high yield savings accounts as of today. Granted, the Fed's just cut the rates recently. They were at 5%, but now it's at 4.5%. So if we can get a guaranteed 4.5% going in and only 2.5% going out, the water in the bucket's growing by 2%. The general rule would be looking at the interest rates and just making a decision based on that. So that would be what the numbers say. But again, if it's keeping you up at night, if you'll create more peace of mind and it's not going to put a hole in the whole retirement plan by paying off the mortgage and it makes you feel better, like what is the purpose of money? The purpose of money is to live and enjoy yourself, right? So if it's stressing you out having that mortgage, then I would explore paying off that mortgage. I had another client who she was looking at getting her windows done or some painting and stuff like that. And she wanted to know, should we pull the money from the investments or take out a home equity loan? And so my question was, well, how much is the interest rate? Well, the home equity loan was like 7.5%. So I was like, you know what? That's pretty high. Don't take out that loan. Let's pull money from the investments and cover that. I always first look to just where the interest rates are for the debt. Like I think when I got my minivan back in 2015, I think the interest rate was like 0.09% or something. So it's basically free money. So I always look at interest rates, general rule of less than 4, don't pay it off, greater than 4, pay it off.